Hey everybody, Dave Costello here, founder and CEO of Jetpack Workflow and host of Growing Your Firm podcast. Today's guest is Shane Mason, CFP and CPA. He's the co-founder of Brooklyn FI Tax, as well as Brooklyn FI, which is the financial planning division of their firm. Really excited to dig into today's interview about launching services, working with co-founders, defining your niche, working remotely, and so much more. But first, Shane, welcome to the show.
Thanks, David. Happy to be here.
Yeah, cool. Well, for people not familiar with your firm, really quick, give us a little overview of the team size, the industry focus, the revenue, if you want to disclose it, just to help us set the stage for the journey you've been on.
Yeah, totally. So Brooklyn FI Tax are really two sister firms. One of them was a standalone tax firm and has been transitioning into supporting our financial planning arm, our RIA. There's a fee-only financial planning firm that specializes in tech professionals and their spouses and doing robust financial plans for them for flat monthly fees, and does investment management for them as well. We have about 11 employees at this point. One of them is an intern and the rest of them are full-time employees. We're growing quite quickly. This time last year, I think we had 4 employees. So we're adding one every other month to service our quickly growing financial planning division. We're adding about 1 client every other day on the financial planning side, and they pay us on average about $600 a month, about $7,000 a year. And then if we do investment management, we do that separately at about 1% of the assets that we manage. We are on track to do about $2.2 million in revenue for calendar year 2021. So that's where we're at.
Very cool. And I have to ask based on some of the stats. So what's that year over year growth then on that 2.2?
Yeah, so we've grown at about 100% per year, running back to around 2014 when we just did taxes and we were just getting off the ground. And I was frankly moonlighting. I was a daytime working at a medium-sized firm, as so many entrepreneurs do. And then they start their own firm on the side and then quit their job and start doing taxes on their own. Got into financial planning in around 2015 and then went all in on both financial planning and tax in 2017. So it's about 100% per year running back to 2014.
Very cool. So you went full time in the firm in 2016, 2017, or you meant you launched the financial services arm in that period?
Quit my day job in 2017.
Okay.
Yeah.
And for you to quit, like, what was the makeup of that firm at that time? It was primarily tax. Mm-hmm. Was it fully remote since day one? And what did that look like?
So we didn't bring on our first employee until 2018. So like back on moonlighting from 2014, probably started with 30 clients, then got to 60 the next year, then got to 150. And I'm realizing, okay, my nighttime, my moonlighting is starting to equal my daytime job. So at what point do I just switch over completely? And then yes, in 2017, I brought on a partner, which we can talk about. And then 2018 was the first tax year where I did not have a day job, and we started to bring on part-time people, and we were not fully remote, fully distributed until COVID, frankly.
Oh, okay.
Yeah, so we went fully remote last year. We were paying about, we were New York City based. We still are New York City based, like Brooklyn FI, right? But we were paying about, I think it was $6,000 a month in rent in the city for tiny little rental spaces. We could all touch each other from our desks. And there were 6 people at that point when COVID happened, and then we all went remote and started hiring people all across the country at that point.
Got it.
Got people in Delaware, Texas, California, Illinois, and Pennsylvania at this point.
Cool. Shout out to Pennsylvania. So you had 150 clients when you're still moonlighting. Were those primary just tax return clients, or were you doing what was the level of service? So the tax season was really busy for you, or were they on monthly recurring revenue basis, or how did that look?
Yeah, so the evolution of the firm is from one-off tax prep to subscription-based for advisory. So that's been a whole journey. And this is our last year, actually, the tax season that we just went through. We're recording this on May 21st. So we just went through our last ever, we're just going to do your tax return for $800 or what have you. And we're about to fire about, I think it's around 100, 150 of those hanger-on clients that have been around. Some of them since 2014, I've been doing their one-off tax prep. And then the only clients that we're going to be working with moving forward are subscription-based clients. They pay us a monthly subscription for advisory services. But yeah, back in 2014, it was just, I'll do your tax return for $350. You know, you get high off that rush, like you're doing it on the side. I was doing, you know, I got from 30, I was making, you know, 25,000, an extra $75,000 per year doing that on the side. It was lovely. But then like you do that for long enough and you realize that that's a really hard way to live, right? Like just having your whole life exist during tax season. I'm sure a lot of your listeners this time of the year are reflecting back on how hard it is to do that type of work.
Yeah, and I want to talk about the advisory services, but you just put a pin on the 150 that you got moonlighting. Mm-hmm. How in the heck did you get those 150 clients? Because that's nothing to sneeze at either. So what was your, like, were you ingrained in a certain community? Did you find like an acquisition method that worked? Like, how did you get those 150, you know, in those first what, 2 or 3 years?
Yeah. So in Brooklyn, have a lot of creative friends, a lot of musicians, painters, artists in North Brooklyn, and just had a big circle of friends that I would offer to do their taxes. You know, everyone needs all the freelancers that come along with that type of work. They got to file those Schedule Cs, and it's a pain in the ass, frankly, right? To come up with the expenses necessary, and if they find a good freelance accountant that can handle a freelance tax return for, you know, $300, $400, that just spreads like wildfire. And I pick up a ton of clients like that. I like to think I'm relatable. I was pretty well communicative. My firm at the time wasn't hard on me. I had plenty of time on the side to pick up and handle those returns during tax season. So that was one way to do it. Another interesting thing that I did back then was I have friends that own a bar, and they came up with this kooky idea for me I didn't have money for an office at the time, you know, to meet clients at, but I wanted to meet clients formally. This is pre-COVID, right? So they allowed me to set up shop they had a cocktail bar that was really quiet and dark, and they put a little sign up that said "Taxman" from these hours, and I would make appointments with clients, and they would come in and they would get a free cocktail. They'd bring in their tax documents, and then I'd bang out their tax return in about 45 minutes. And I would do like, I don't know, 20 of those a week. I would go from my day job straight to the bar, get home at midnight, and just rinse and repeat for months on end. And it worked out great. Like, got a lot of press coverage. It was in a bunch of blogs, and then it was in the Wall Street Journal, and then I was actually on TV a couple of times. I was even on Maria Bartiromo's show. She was like making fun of millennials, funny ways to be entrepreneurial. And Tony Robbins was actually on the call with me. I remember being on satellite TV and like hearing Tony Robbins' voice in my ear. Like, wait a second, is that Tony Robbins? But yeah, that was fun. I got a lot of press that way. I still have some clients from that coverage.
So you ended up knowing the owners of this bar. There happened to be a space, and then either you or they, or somehow jointly, probably after a couple of cocktails, came up with this idea to kind of host tax hours. You know, you get clients, they get clientele, they have the first drink, maybe they have the second or third cocktail there. Cocktails are, goodness, what, like $15? They're not cheap. So these are good clients to have. They're right, $15 drinks, right? Although in New York that might be pretty cheap for a cocktail. I don't know, but that's amazing. Now, fast forward, you get into advisory services. You've been doing these one-off tax returns. You build up a really amazing, for lack of a better word, side hustle. You're making really good money on the side, but then you go full-time. You say, I want to go into advisory. Advisory is such a abstract word. Totally. So I have to ask, what does that mean? Like, what are you actually delivering then that's different than the individual tax returns?
Yeah, totally. So we had a lot of creative clients at the time, and that kind of, what is advisory? Like, how do you provide advisory to like creatives? Well, we actually don't anymore, because when we were working with creatives, we would also be working, other people in the creative space, quote unquote, were also like technology people working at Spotify was our first tech employees that were in the creative and tech intersection. And we started picking up clients that were dealing with stock options, non-qualified options, incentive stock options, RSUs, and restricted stock. And, you know, just frankly, like dealing with the people, like the income of those types of employees is a lot higher. And I was getting a lot higher priced services by servicing those clients. So our niche just naturally started to steer away from creative clientele towards tech professionals over the years. And in terms of advisory for those clients, it was mostly tax advisory. So, you know, I got my CFP in 2015 and then tried to do like ad hoc financial planning for tech professionals on the side, and realized that figuring out how to handle the tax issues of incentive stock options on an hourly rate just wasn't going to work. So we just went all in on a subscription service because there's just so much work that needed to go into that. And we started really digging into it in 2018. And the actual services that we provide to those tech professional clients is a lot of tax projections, right? Like, here's what your W-2 income is year to date. Here's what's going to happen when the rest of those RSUs vest, that you're going to have an under withholding issue because they only withhold at 22%, for example, on RSUs. Here are the incentive stock options that you have. Here's exactly what's going to happen when you exercise them. Not only how much cash you're going to need to actually exercise those options, but also what's the tax liability going to look like on the other side of that exercise, because you got to budget for that. What's the timing around that? How do the credits related to that work out over the course of years? And also, yeah, that's the tax element of a financial plan. But you got to think about, education, funding for their kids. If they want to buy a home, we got to come up with the cash for that. If they want to max out their 401k, here's what we allocate. Here's what actually, like, we mechanically go in and tell them how much to do in their to set aside in their paycheck. We handle their investment strategies, we handle their retirement strategies, et cetera. All of the pillars of general financial planning, but with the core, like, biggest problem for that niche being how to handle their concentrated positions within their companies. These are people, our average client age is 36 years old. So they're really they're mostly millennials. They're very into transparent pricing. They want to know how much they're going to be paying for the advice that they get. Our fees are right there on the website. They get it. We move into managing their concentrated positions in their companies. And these are young people that, they're suddenly millionaires because Spotify is about to IPO. We're dealing with a lot of BarkBox people right now that are about to IPO. There's so many IPOs per year. There's often people knocking on our door that need us to help them, guide them through this, liquidity event that they're experiencing. And they've never had the money for a financial planner. They haven't really ever had money before for a lot of them. So they need help navigating what it's like to suddenly be so rich.
Yeah, and how did you have the foresight, or what prompted you in 2015 to get your CFP, to go through that training and certification?
I think the CPA, like the AI CPA, was just beating the drum on advisory being the future. And, I think I met a CFP at my job. My day job was an estate planning attorney, and he got the CFP, and I was just always looking for ways to enhance my career and sharpen my skills. And I just always, anyone out here that's just always looking into credentials, I finally looked into that one. I was like, CFP, this seems like something that, like, this is a good one. There's a lot of trash ones out there. And I remember looking at the requirements and realizing that this was necessary to open up an investment advisory firm. I was honestly scared for some reason that I wouldn't have anything to do in the summer and the winter outside of tax season. I was like, oh, I'll do some ad hoc advisory. And now it's just kind of totally flip-flopped. And 70 to 80% of our revenue comes from that advisory, and the tax work that we do is honestly a little bit back office. It's just like getting those returns done as part of the overall advisory experience. And most of what we do is be that crystal ball around what's going to happen when the IPO happens. Here's what happens when your RSUs vest, et cetera.
Yeah, and so you said that there's some, less than ideal certifications or courses. Are you okay disclosing which one you went through, and would you recommend it for others?
That I would go through, or that I wouldn't?
to get your CFP, that you would go through.
Oh yeah, well, anyone that's looking to get in, like, financial planning advisory, like literally assisting people with their personal finances, I think the CFP is there's no replacement for it. There's a chartered financial consultant, which is a little bit different. It's used mostly by insurance agents, but the CFP is the gold standard in terms of just figuring out the scope of service, like figuring out how big the forest of personal financial planning is. And then after you get the CFP, I think you would want to niche into something specific: doctors, lawyers, tech professionals, engineers, something of that nature.
Yeah, I love it. Well, you go all in. It's 2017. Through the progression of your focus, creatives and creative technologists, then you get into pre-IPO tax planning. You bring on a co-founder. At the time, you go all in. It's the new foundation for the firm. Walk me through that period. How did you know it was the right time to bring on a co-founder? How did you know it was the right person? How did you know how to, for lack of a better word, because I come from tech, vest that relationship, right? Because you hear it in technology companies, it's like if you have 3 co-founders, you should all be on a vesting schedule in case one of you backs out in 2 months. So how did you think about that start of that relationship, and walk us through that rationale and logic and how that developed?
Yeah, totally. So I was about to quit my job, and I was being interviewed for another podcast, actually, by AJ Ayers. At the time, her name was AJ Grossan. And it's really cool. You can actually hear the day that we met on her podcast, Money Splain. I'm being interviewed by her back in 17, in the summer of 17. And she was looking, she was working at a tech firm, and she had just got her first grant of options, and she didn't know what the hell they were. AJ being the type of person that can't handle not understanding something. She like goes way into the deep end on getting into personal finance, interviews a bunch of experts in various areas, estate planning attorneys. I was the tax guy that she interviewed. And, I went through that interview with her, and she said, I told her I was going to Japan afterwards. Like, we went to she's a Japanophile. We went and got beers the next day. All we ended up talking about was our passion for personal financial planning, for maybe 4 hours. And then I challenged her. I was like, well, if you want to, do something together in this space, you're going to need to get your CFP exam. And I thought that would be your CFP certification. I thought that would be the end of it, because that takes 2 years. She enrolled
Wow.
that weekend in NYU's program and sent me the email that she'd enrolled. And then I realized she was serious. So, I was starting to think, we had a lot of conversations about, I'm bringing over all the experience. I'm the only one that can actually own a registered investment advisory firm because I'm currently a CFP. What does it look like for her to own the firm? What kind of vesting, as you say, should we look at for her to prove her mettle or test her mettle and prove that she would be a good partner? She's a career changer. She was working in PR. So it actually was a good balance, me being the technical side and her being the communication and marketing side. So that tax season, she got her EA exam while working her day, or she passed her EA exam. I put her through tax season while she was working her day job. So that was intense. She proved herself that way by preparing a few hundred returns and getting her EA. And then, we decided on a 50-50 partnership if she could pass her CFP exam. And she did. She passed the exam, got the requisite amount of hours of time advising clients, became a CFP, got 50% of the business, and now we're both 100% dedicated to growing that pie that we have. 50-50. 50-50 was a shaky one. We couldn't understand. Like, we were trying to figure out how much of the pie to split up, and we just listened to a ton of podcasts, did a ton of reading, and realized that if anyone owned more than the other, somebody was going to be uncomfortable devoting their time to the firm, is what we thought. And I just thought that, if I own 60% of a pie that's worth $1 million, I'd rather own 50% of a pie that's worth 10, right? So I get all of AJ's help now, and she's an incredible, incredible business partner. And it's had everything to do with how fast we've been able to grow over the past 3 years.
Yeah, and she went full-time when you went full-time, is that correct?
We didn't plan on her to quit her job for about 18 months. But we had so many clients come on board right after that tax season. I needed so much help that she quit in June, like 6 months later instead of 18 months later. So,
okay.
Yeah. So it was a fortunate thing. And then that growth just hasn't stopped since then. So that's how we're at 11 people now.
Yeah, that's amazing. Well, a lot of areas to dig into there. I mean, one of the first questions I have is you went remote because of COVID, very similar to us. You're still remote. It sounds like you're going to stay remote now that you've hired people outside of New York. So what have you found to work well in creating cohesion in a newly minted remote company? I think that's the question on everybody's mind, especially as we kind of reopen society.
Yeah, man, it's going to be hard. Like, bringing on all of our new employees that we've never met in person. I haven't met half of our employees in person, which is so strange. I'm sure it's something that you deal with too. And just building, like, trying to extend the culture and get them into the culture that we've built up over the years it's been an interesting challenge. It's hard to do that over Zoom and Slack. But some of the things that we do is we have all hands every Monday. And we have Zappy Hour every Friday are two of the things that we try to do. We have a culture guide that we use Mighty Networks to try to share with our clients, or with our employees, I should say.
Did you say something about Mighty Networks? Did I catch that name right? Would you?
Yeah, it's a software tool that allows you to compile a bunch of internal documentation for employees, such as like a culture guide, an employee handbook. What else do we have in there? Like, our holiday schedules are in there. All of those things that you would normally just talk about around the water cooler, or that you would just have on a poster in the office, or even just physical. We just load those into Mighty Networks. It's easy to update, easy to search. It's a really cool tool that our business coach has put us onto recently. One other thing that we do is all of our employees are assigned a Pokemon when they come on board, and we have an organizational chart that is just all of our designated Pokemon. So that's just a one silly thing that we do to like build some camaraderie.
Build some fun.
Yeah.
That is I would say exceptionally hard if you're not used to it, is making remote fun. In the office, it feels so easy and organic, but then when you go remote, you're like, oh, I have to think about how to create fun, right? Or it's very odd. You have to really work. I mean, at least for me and for us, it feels like you have to work a lot more at it. So you do a weekly all hands, you do a weekly happy hour, or you think you call it Zappy Hour?
Well, it's a Zoom happy hour, yeah. So we call it Zappy Hour. It's actually it's in a few hours. We do it every Friday.
Yeah. Okay, very cool. And then you have like the internal wiki through Mighty Networks.
Yep.
So you mentioned something that I think was interesting just in passing. You said our business coach recommended it. So who's your coach? What do they help you with? And what were some big takeaways from your coach?
Yeah, our coach's name is Angie Herbers. She runs a firm called Herbers and Company. It's frankly more focused on the investment advisory space rather than like the accounting and tax space, but she is familiar. We actually just got off a call with her right prior to this, and we were coming up with a comp table for all of our, we already have one for the financial advisors on the team, and now we're building a comp table for all of our tax and accounting professionals as well, because we're adding them so quickly now that we just need a reference point, and it just, she's been super helpful with things like that, like not only helping us change our mindset as we get to be so much bigger, and we don't do as much of the technical work anymore. We do more of that delegating and management, but also coming up with just building blocks, like some of the key things that we wouldn't know how to come up with on ourselves, that we would just be Googling salaries for a position that never existed before, right? So she helps us with that type of stuff.
Amazing. So she runs her own firm, or she's a partner at her own firm, and she takes on coaching clients on an ad hoc basis.
No, I think she might have worked in an RIA back in the day, but all she does is management consulting now for RIAs, and she's got a ton of team members. I think it's more than 20 people that work with her at this point.
Oh, very cool.
Yeah.
Well, shout out to Angie if you ever want to come on the show. If Shane recommends you, you can come on the Growing Your Firm podcast. Yeah, you mentioned a mindset change. Walk us through that a little bit. What does your week look like now, and what was the hardest thing to transition out of as you've grown so quickly?
Yeah, I mean, one of the things that's been hard is just going from being the technician to the business owner, right? It's the common thing of just deciding what you're not going to do anymore, and just figuring out what that is, and not feeling bad about delegating that stuff to other people.
What was the hardest thing to delegate? You're like, but I'm so good at it, or I like it so much. What was there's a specific thing?
Well, some of the things that are hard to delegate are like the sensitive things, like actually like
for sure
paying people, right? Like someone within the team, are we going to allow someone within the firm to actually run the payroll, right? Like, and know what everyone's salary is. That was something we decided on this week. Was that something that's actually yesterday, someone was just promoted to that role to actually be the internal controller for the company. It's not something that I enjoyed, like running payroll, but it is like a sensitive thing. And you're like, do we really want someone within the company, like in the Slack channel, to know what that is? So obviously that's a difficult thing to delegate, but we trust our controller. And then some of the things that I enjoy, I don't know if I've given up anything that I enjoy. Like I don't like relish reviewing tax returns too much. So that's been hard to give away, because you're signing the returns that are actually, I review them at the top level, but not getting into the weeds on them. I don't know if it's been tough to delegate things that you don't enjoy, right? Because you're like giving this away, this task that I don't want to do anymore. It's like, now you have to deal with this. So that's been tough, but at the end of the day, you just got to get over it and just say, anything that I've mastered, I shouldn't be doing anymore, because if I'm able to grow into a new position, that leaves room for someone else to grow into that role and learn those new challenges. I think I've gotten over that at this point. I'm just trying to delegate nonstop, because that's the only way that we're going to be able to grow.
Yeah, such a good point. And it's so true, actually, thinking back to all of our interviews. It's like the things that people do not want to delegate, or the things they actually don't like doing, because they're like, I don't like doing it. My direct report's not going to like doing it. So, I'll just do it. I'll just do it for them. I don't want to burden them. I don't want them to have to do it. It's like, that's your job to either create the system, automate it, or delegate it, right? And kind of move it on. So that's actually the hardest thing to get rid of.
Yeah, I'm trying to just remove myself from the business 100%, just trying to figure that out, because that's the only way that the enterprise value of the company is going to be able to continue to grow.
Yeah, got it. Well, two quick questions then. On a very tactical question, I want to get to your kind of long-term plans then, based off that comment, but very, very practically speaking, short-term, what's the price point you charge for these planning services, and how did you arrive at that price?
Yeah, no worries. It scales up. Actually, it's a complexity-based pricing. The calculator is actually on our website. So the clients, when they come to our website, they actually fill out their own price on the website, which is really rare within the investment advisory space. And it kicks it out and they bring it to the meeting, or like, it comes into our Slack channel and we review it ahead of the prospect call. And it typically matches what they got on their call. Maybe they don't understand that they actually have RSUs or something till we have the conversation. But yeah, there's a fee for whether or not you're married, whether or not you have kids, whether or not you have specific equity comp, if you're going through a divorce, if you've got international tax issues, what have you. Every button that you push on our website is a pricing mistake that we made in the past, right? Because we didn't know that we would be dealing with this issue, and then we do deal with it. We say, all right, we need to add another fee for that in the future. So we add that.
Well, how do you come up with a fee then? You're like, ooh, we forgot about that, increases the scope. We're just gonna need to do it now because we gave them this price, we want to honor it, but we need to add it in. So how do you come up with the price to add it in?
Yeah, so it's just trying to figure out, at the end of the day, like, you're trying to value price, right? It's hard. It's like a blend of value pricing and fixed fees. You got to think about how many hours it's going to take. You got to think about what the cost of the hours are for your staff. You have build in your margin, and then you try to build in a little bit of value pricing for certain services that you do provide. And then anything fixed fee, it's going to allow you to get volume a lot quicker than trying to price something in automatically, or like trying to value price every client. But you're going to win some and you're going to lose some on a fixed fee schedule, right? Because some clients they're going to have that additional fee for the complexity. And it's going to be actually easier than you thought it was going to be, or it's going to be harder than you thought, and you're going to win and lose some. But as long as you win more than you lose, it allows you to grow the enterprise value very quickly and add a lot of clients and then a lot of revenue, which gives you scale, which allows you to bring down costs in the admin and back office space is the strategy that we're employing here.
Yeah. And the base package is what, $5,000 a year, $6,000 a year? It starts at, and then it adds into based off of the toggles you.
Yeah, I think the cheapest you can come into the firm is just right at $5,000 a year. And that's if you're like single without a ton of complexities. And then I think our most expensive package is around 11,000. And that's for financial planning specifically. If we actually do the investment management for you as well, we help you unwind a concentrated position in Apple, Spotify, Palantir, whatever. And now that money is now, liquid and able to be invested, and you have a strategy. We come up with a strategy. We've actually employ that or deploy that strategy. There's a separate assets under management fee for that.
Got it. You mentioned the long-term enterprise value, getting yourself out of the business. So as you think about the next 3, 4, 5 years of the firm, is your objective to actually not be involved at all? Is the objective to sell? Is the objective to move yourself out and launch new services? How do you think about the future of the firm now?
Yeah, so the future is probably consolidating services, like just building scale and making sure that everyone on the team knows exactly what they need to do, and having so many people that each person only does one thing really, really well. As we add people, we're taking responsibilities. Maybe one person is filling two people's role right now. And as we get to scale, we have that person maybe taking half of those responsibilities off their plate, so that the ones that they do retain, they're excellent at, and it's very obvious. And then just building the internal workflows that allow the communication and the friction, or allowing high communication and low friction between team members. And just trying to make an incredible client experience, almost being like a client or a product manager in the tech space, making sure that there's never any confusion about when they're going to be meeting with us next, what deliverables they're going to be receiving, also the value that they've received from our team, and just building high brand loyalty. Because when the value is there, they never question the fee, right? So always just trying to show value, add value, and the intention is not to sell. The intention is to continue to grow, and yes, remove myself from the business almost as a business challenge. Is like, if you can, getting clients was something that I was challenged at first, adding employees and being a manager. And then I think the ultimate challenge for us now is figuring out how to just remove the owner of the company and allow it to operate on its own, which is something I've been having fun with over the past year and a half, and probably will be for the next 5 years.
Yeah, very cool. Well, on that note, what books, podcasts, people have you found to be inspirational or informative for you in this stage of the journey of, removing yourself from the business? Does anything come to mind as a valuable resource or potent, kind of person to follow as you're thinking about these things?
Oh, that's really interesting. I think a lot of people need the permission to be like a business owner, like to decide that they can remove themselves from the business and they don't have to do everything themselves. I mean, anyone that hasn't read The E-Myth definitely needs to read that, just like as a cautionary tale against owning their own business, going from being a technician to a business owner. But besides that, there's a book called The Courage to Be Disliked, which is something our coach recently put us onto. Are you familiar with that one? It's just about.
You know, I bought it. It's downstairs. I saw the title. I think one person recommended it, and I was like, brilliant title, love it, gonna buy it. And the reviews on it were phenomenal. So I purchased it. I have it. I haven't read it though.
Yeah, right on. There's plenty of those. I mean, if you can see behind me, there's a stack of books that I haven't read back here, stack of business books. But
Yeah.
yeah, that one's really cool. Podcast wise, just the Michael Kitz's podcast has been amazing for RIA owners, people that are getting into the investment advisory space. You have to listen to that one. It's just a bunch of journeys and tales of people that have gone from that have built businesses really similar to your podcast. Actually, I listen to every one of your episodes as well. Obviously, shout out to the Jetpack Workflow podcast. The Cloud Accounting podcast has been super helpful for me to stay on top of cloud developments or cloud technology. Yeah, I mean, and there's all kinds of new podcasts that pop up all the time. I probably listen to 40 hours of podcasts a week. This is what I do walking around New York all the time.
Yeah, love it. Shane, this has been a real treat. If somebody wants to reach out, say thank you, connect with you, learn more about what you're doing, what is the best way for them to connect with you?
Shane at brooklynfi.com.
Love it. Love it. Love it. And so if you're walking around listening to podcasts, very similar to how Shane does it, you couldn't write down everything. We're going to link everything up, the podcast he mentioned, the coach he mentioned, any book or resource he mentioned at jetpackworkflow.com/blog. That's jetpackworkflow.com/blog. If you enjoyed this interview, please leave a review. It helps get the word out. And if you really, really loved it, share it with a fellow firm owner that needed to hear something from today's episode. Shane, thanks again for coming on.
Thanks, David.